Hello and welcome to Big Deal. Now, the Competition Commission of India has changed the way India does deals, and the recent amendments proposed, yet to be notified, remember, are set to bring about some meaningful changes in mergers and acquisitions, as well as dominance, antitrust landscape of India and private equity VC investments. Let me welcome on the show two learned people who are going to throw more light on the amendments that are proposed and how it's going to be a game changer. Let me welcome to CNBC-TV18 Gaurav Bansal, who's a partner at AZB and Partners, and Shweta Shroff Chopra, who's a partner at Shardul Amarchand Mangaldas and Company. So good to have you on the show. Now, let me begin with you, Shweta. You have been deep diving on the various aspects of CCI from its very inception. What are the notable changes that are really proposed in your view, which are going to have a huge impact on the deal scenario?
So thanks, Nisha. The Competition Act, as most people will know, has been around for a while on the statute books, and it was time for an upgrade, which is why the government has introduced the Competition Amendment Bill in Parliament. This followed a competition law review committee, which undertook the exercise of reviewing the Competition Act. As far as mergers and acquisitions are concerned, the fundamental changes to be expected in this is firstly the introduction of a deal value threshold. The deal value threshold is local nexus to India, substantial domestic operations in India.
Yes.
So given that, that's going to be a fundamental game changer, because until now, the de minimis exemption used to be, quite a safe harbor. But when this deal value thresholds will get introduced, the de minimis exemption will not be available.
So let me stop you there, Shweta, because we saw a big merger in the exhibition space very recently, where it did not meet the threshold in terms of the turnover in the erstwhile regime before the amendments really kick in at some point. And, even though there were complaints, it did not come to the CCI table. So that is one aspect. Let's delve into deeper. That is the deal value threshold of 2,000 crore rupees. Gaurav, jump in on this. How will it make a huge difference? Because 2,000 crores for now, a robust economy like India, is very small an amount for any deal. So what do you think is the thinking on the CCI's front, and what are the factors that needs to be looked at? Because the CCI chairman clearly stated in our interview that not all deals with 2,000 crores threshold will make it to the CCI table. So what are the factors that should be looked into?
No, thanks, Nisha, first of all, for having me on the show. Absolutely, you're right. I mean, the deal value itself will not be the relevant parameter. It's not the only parameter for the deal to be notified to the CCI.
Yes.
And that was a clarification that was very helpfully given by the chairperson himself on your show as well, which is that, look, there will be other factors as well, which will be considered to assess whether a deal is notifiable to the CCI. Because let's remember the fact that the existing thresholds of asset value and turnover actually reflect the competitive position of the target, right?
Yes.
And that is the fundamental basis on which the antitrust jurisdictional thresholds are based, as opposed to a deal value threshold, which doesn't really, signify how big the target is or how big the acquirer is. So a deal value in and of itself doesn't let you know whether a transaction is sensitive from a competition law perspective. And therefore, these guidance which will be put together, again, the chairperson has very helpfully clarified that these regulations will be put in place after extensive consultation with all the stakeholders.
So in your view, Gaurav, prima facie, you have been speaking to all the industry experts. You've worked on various CCI mandates for many deals across the board. First few things that come to your mind on the factors which should be exempt.
So first of all, the factor should be related to the domestic revenue of the target, right? Like Shweta said, right now there's a target exemption. So if the asset value of the target is 350 crores or the turnover value is above 1,000 crores, it's below 1,000 crores, then you are exempt, right? What deal value will do is that even the asset value or turnover below these thresholds can get caught under the transaction value threshold.
Yes.
But there still needs to be some sense of local nexus with the jurisdiction so that CCI can exercise jurisdiction over that deal.
Yes.
And that has an effect in India, right? But the most important parameter that one needs to look at is to see that, that this turnover for the target, which is set as a threshold, should be highly disproportionate to the deal value itself, right? Because that is the fundamental reason for introducing a deal value threshold, which is to capture killer acquisitions, where you are attributing a value to a target based on its potential, competitive significance as opposed to its current competitive significance.
Okay.
So invariably, the turnover of the target in such acquisitions are going to be low.
All right. So you brought about the concept of killer acquisition. Shweta, jump in on this particular aspect, because do you think that the CCI, in widening its net on the number of deals that it comes by keeping the deal value threshold so low, is targeting big pharma, big tech, which is looking at killer acquisitions, which is a big thing overseas, being talked about, antitrust commissions all across the globe, and also in India, where some of the big firms may be looking at killer acquisitions and also trying to really cannibalize on the smaller companies with good innovation at a very nascent stage.
So Nisha, you're absolutely right. I think the intention to introduce the deal value threshold is to capture transactions which were erstwhile not notifiable because they didn't meet the asset or turnover thresholds in India. However, I think this net may be cast far too widely if the regulations and the guidance that is put out by the Commission does not keep in touch with what is reality on the market, and therefore it's important that these are defined specifically with respect to the sectors that they wish to target. As far as killer acquisitions itself are concerned, you are right, absolutely, that they are being looked at across the board. And typically what is sought to be looked at is whether that is leading to an acquisition of technology. Because in most of these digital markets or high innovation markets, acquisition of technology and innovation or R&D, those are the factors which trigger these disproportionate valuations that Gaurav was mentioning. And the idea is that the CCI should have jurisdiction over such transactions so that they may review these transactions and determine if there is actually going to be an appreciable adverse effect. But in doing so, we have to bear in mind that for the startups, the exits for both private equity as well as founders is a very important aspect. And exit to the large players, to big pharma, to big tech, is one of the ways where the founders' work product and dream is actually seen to fruition at the largest scale. So I think it's a fine balancing act. And in principle, whilst it's important to do so, but one has to do that in the context of where the Indian economy is and the impact it has on India.
So it is going to be very subjective from case-to-case basis. Both of you will, agree with that, I'm hoping, because as Shweta said, that some of the companies are designed, some of the innovations are designed to be sold to bigger companies for scalability and also for infusing more funds at a later stage. Very recently, we have seen that some of, the batteries for renewable energy storage, that kind of innovative companies have been bought over or have been invested into by the bigger companies, because those companies themselves themselves didn't have the ability to scale that company. So this is one point that I wanted to make. But Gaurav, on this particular thing, there's another aspect of private equity. Do we have clarity of private equity as well as venture capital? Because 2,000 crore rupees is going to be assessed on the basis of the full round of fundraising, or each of this private equity or VC investing into it? Do we have clarity on that?
So, Nisha, a lot of clarity will come by way of regulations, right? But there is one existing regulation which talks about interconnection, right? Which effectively says that tie down into calculation of the deal value threshold, right? First of all, there's no specific guidance on that as of now, but maybe one way that one can think about it is that, look, if the private equity players are funding a startup, having their own independent rationale,
Yes.
And without, consulting or without pulling in money with other venture capitalists or private equity funds, then such transactions should be valued independently and not cumulative. Right?
All right. So
if the private equity funds are pulling in money together, and the objective is coming out very clearly in the deal documents, which invariably it does, then in those certain cases, there is a possibility that the deal value will be considered as on a cumulative basis.
All right. So this is a very good clarity, which CCI has also given out, that private equity VC, it's not going to be on the basis of rounds if the investors are not working together and there is no interconnectivity. But on the other hand, an acquisition made by a consortium of investors pooling in together and making one decision, that will come under the radar of the deal value threshold of 2,000, because 2,000 crores is a very small amount for the kind of rounds that we have seen even in the smaller startups. One more aspect on the deal value threshold, Shweta, that we need to explain is the local nexus. What is the understanding and what are the technicalities that needs to be explored further?
So on the local nexus, I think the terms used in the draft bill is substantial domestic operations, substantial operations, business operations in India. Now, what is substantial business operations? I think the important thing to bear in mind that this test needs to be as objective as possible, because the whole fundamental aspect of notifying a transaction needs to be transparency, certainty, and consistency.
Yes.
So these three aspects the CCI needs to bear in mind in determining or giving examples of what local nexus or what substantial domestic operations in India would look like. Now, given that we believe that the focus is likely to be on tech or on pharma, I think there will be the kind of local nexus indicia will be in relation to number of users which are active, number of users which are enrolling, but it could also be more broader in terms of the research and development facilities, for example, that the parties may have, or for pharma, it could also be the trials which they are doing, or for example, the patents that they may have filed. So I think these are all very subjective, and I would just urge that in the Commission's process of defining these, A, they continue to remain dynamic and agile to remember what is the state of play in India. B, they are as specific as possible. And C, they err on the side of doing business in India, the ease of doing business in India. So I think I'll leave it at that for now. But we have to watch the space.
So each of these will require very defined guidelines. A template approach could be very good, and then with the agility on a case-to-case basis, where legal luminaries like yourself will throw more light on evolving the CCI amendments and the rules going forward as well. All right, hold on to your thoughts, Gaurav as well as Shweta. We have more to discuss on the control aspect and the material influence aspect that has been brought in by the CCI and how it's going to really be a game changer in the way India does deals. Stay tuned to Big Deal. Welcome back. You're watching Big Deal, and we are discussing the new changes that could come in the Competition Commission Act and how it's going to really be a big game changer for the deal making in the country. Now, Shweta, we were discussing the deal threshold, but on the other hand, the control aspect, which is defined in different ways by the different regulators, has a very, very meaningful role to play when it comes to the clearances and approvals by various regulators. In CCI's new definition or an updated definition under the amendments, material influence has been added to the control aspect. How do you read into it, and what are the aspects now to be watched out for?
Okay, so I think this is, I think, perhaps one of the most significant changes as far as codification is concerned. Whilst the CCI's practice has been to look at control in the broadest sense, so they look at it as a sliding scale all the way from de jure control, where you have more than 50% of the board or more than 50% of the shareholding, to de facto control, where you perhaps have less than 50% of shareholding, but there are other circumstances, for example, agreements or financings, or the presence of important shareholders, which can give a well understood threshold of decisive influence. So when the merger control regime started, decisive influence was seen as the litmus test. So where there were veto rights, which could cause a deadlock in relation to sort of strategic matters such as KMPs, business plans, entry or exit of line of businesses. But over time, that has got muddied. And now this is muddying that a bit further, because it gives the CCI to look at the nature of control as opposed to some objective metrics. Now, in terms of what would be seen as control, there could be multiple aspects. And in some of the cases, the CCI has expressed its view to look at things like the shareholding. So this could also mean like the cap table or shareholder arrangements. It could mean special rights. And these don't necessarily have to be only veto rights in relation to the 3 or 4 decisive influence matters, but could be much broader than that. For example, to include change of auditor or change in the MOA, AOA of the company, which gives the investor the ability to influence the way it is done.
Yes.
And also to include the status and expertise of an enterprise or a person, where the enterprise holds, where such a person has a great, personality or influence, or is an expert, that may be also seen as giving control. Also, there's board representation and structural or financial arrangements, which the CCI has built out.
So Shweta, yes, so a lot has been left to subjectivity, and the fine print will need to be defined much better in this, because then otherwise every deal can come under the purview of this material influence by an investor. Say, for example, Gaurav, throw more light on this particular aspect. A lot of times private equity with a minority stake wants a board nomination for investor protection. Can that also come under the purview of material influence by a minority shareholder?
Yeah, so if we were to go by the practice of the last 2 years, it seems like that the CCI is targeting at review of private equity deals where there is an ability to appoint a director. Now, the logic that the CCI is looking at is effectively, earlier they used to look at the ability to take strategic decisions of the target, but now they're simply looking at the ability to participate in the management and affairs of the target, right? So if you simply have the ability to participate on the board and make your thoughts presented to the board, that the CCI is viewing as having some sort of an influence that you have, that you can command on the board by sharing your thought process.
Right.
So the way this is heading, it seems like, what is typically considered to be an investor protection right, because you would want to see how the company is doing, whether the thousands of crores that you have invested are protected by the right
So
commercial
here I would
policies.
like, Gaurav, this will need a much deeper discussion, because the board composition in itself, the law presents that no one person has more rights, and the board itself is composed in such a way that there is enough democratic decision making on the top. But very recently we have seen Yes Bank investors having a board nomination on Yes Bank, RBL Bank investors wanted for their investor protection. So this is an important point. But one final word, Gaurav, and very quickly, open market purchases, and that with CCI approval being subject to it, can be done immediately. What are the guardrails that needs to be defined here? How will it work? Very quickly.
So as of today, you cannot make open market purchases before you notify the deal to the CCI, because that amounts to gun jumping. What this proposed amendment really helps is that you can make a post facto notification to the CCI. The things to be careful about is to in terms of guidelines, we need to ensure that proper escrow mechanisms have been put in place, and how those escrow mechanisms would work to ensure that the acquirer indeed does not exercise any beneficial rights over the shares that are put into the escrow.
Yes.
So those kind of guardrails are required to be put in place, because
all right, Gaurav. So two
law,
important takeaways from you, that and CCI has also explained it, that probably the ownership of that particular shares will be in escrow till CCI approval comes, but the transaction can be done at that very moment, so that there is market volatility that can be avoided over a longer period of time. This will require a lot more work also, because if there is a material difference in the way the deal is structured after CCI approval. So thanks, Shweta, as well as Gaurav, for putting a lot of insight into some of those game-changing amendments that are really proposed. Of course, we have to see what really comes out in the fine print, but I would always say that precedents coming in from CCI's approval process on various deals will set the ball rolling on how CCI's working really depends, and how it approves various deals. So we'll be watching out for that and the approval of these amendments. With that, it's a wrap on this edition of Big Deal. Thanks so much for tuning in.